Okay, welcome back. We've got the market, which is up about 35, 40 points. Broader markets are sulking a little bit, but it's that kind of a day. And of course, later today, you've got a big global macro event, which is the last Fed decision for 2024. Well, the shipping industry is in focus next, and we've got one of the largest companies with us, Shivakumar, Executive Director and CFO at G Shipping, is now with us to take some questions. And, 25 could be material once Mr. Trump is in office. And depending on what he does, I think consequential for freight rates. Mr. Shivakumar, great to have you with us here. Thank you for your time. At the last you were on with us, you said the Russia-Ukraine conflict and what really happens there is very, very material for freight rates, right? Have we seen any, as we get closer to the inauguration, have we seen any movement in freight rates in anticipation? I'm not sure if freight rates move like stock prices in anticipation, but has there been any movement at all?
Yeah, morning, Prashant. Thanks for having me. No, there hasn't been a movement in anticipation of the inauguration. But tanker freight rates in any case have been pretty weak, driven more by market fundamentals than anticipation of geopolitical events. So we've had poor refining margins this year, and they continue to be poor even in this quarter, which means demand for transportation of crude oil has been pretty poor, and so also for refined products. So the market was expecting the normal winter bump in rates. That has not happened, and therefore we've had a pretty weak quarter. So that's been happening, and as I said, it's driven by fundamentals. On the Russia-Ukraine front, we are seeing actions almost every day from the EU, the UK, sanctioning ships that have been in the trade, in the Russian trade, which eventually could have some impact because those ships then get taken out. But that's not going to have a short-term impact, really.
Okay, all right. Hi, good morning, Mr. Shivakumar. Thanks a lot for joining in. Could you quantify the fall? If you compare the spot rate with regard to what we saw, say, in the previous quarter, how much lower are they?
Yeah, so the previous quarter anyway was part of the summer lull, so that would have been pretty low. Let's compare it seasonally, which is a year ago.
Year on year, perfect, yes.
Yeah. So product tanker rates, so small product tankers, which is a workhorse of the fleet, 45 to 50,000 ton refined products carriers, they're probably down $15,000 a day from a year ago numbers, $10,000 to $15,000 a day. Crude tankers haven't suffered as much, probably $10,000 a day. So we're talking 25 to 30,000 for product tankers, coming down to maybe around $15,000 a day for the small product tankers. And for the Suezmax crude tankers, which carry 1 million barrels of crude oil, coming down from maybe 45 to 30 to $35,000 a day.
Okay, all right.
So that's across the board about a $10,000 cut year on year, approximately.
Okay, we had a good couple of years, Mr. Shivakumar. Do you think this is the start of a bit of a downtrend? You have warned us in the past that some of these rates that we were seeing may not hold out, and you have cautioned investors as well as our viewers. Do you think we're at the start of a fresh downtrend, or do you think that we're more or less going to stabilize in this sort of a band?
So it's tough to call. Rates have been pretty low, so it's surprised most tanker market participants that we've had rates at such low numbers for the last 3 to 4 months.
Yes.
Again, it's down to oil demand, which has been pretty poor. Specifically, transportation fuel demand has been pretty poor. So diesel and petrol demand worldwide. And in the 3 large blocks, which is China, EU, and US, are negative growth year on year. So that's a little bit of a concern, whether there's an underlying problem really, and whether that will get sorted out. So that's a macro issue really. And of course, you have the EVs, growth in EVs fleets in China. So it could be, but again, the spot market moves with short-term factors. All I'd say is that it's been weaker than one would have expected. And if the next quarter, because these are the 6 months in which tankers make most of their money, the winter months, and if the next quarter is poor, then I think the market participants will say, then maybe this market is over.
And
We've already
70,
seen
80%.
ship prices come off maybe 10 to 15%.
I see. And I think I will just come to that with what you're doing there in terms of purchase of ships, etc., which we've spoken about in the past. 70, 80% of your fleet is spot, right, Mr. Shivakumar? Exposed to
That's
spot.
right.
Yeah.
That's right.
Okay.
70 to 80% of the tanker fleet is spot.
And on rigs, offshore rigs, is there going to be, what's the outlook looking like? I mean, where are these deployed? I mean, in the US, for example, now we are talking about maybe a bit of a boom for the industry, for the oil industry. And I'm not sure whether that will reflect in what way it will reflect in prices, but for the business itself, will that mean anything for you?
Drilling business is very localized. So what happens in the US, and the US will probably be an onshore shale kind of thing. So unlikely to affect offshore to that extent. And in any case, it's a very regional kind of business. In our case, we had a rig which came off contract a month and a half ago. She's got a short-term contract. She'll go on to the contract sometime within the next 3 to 4 weeks. We have another rig coming off contract. We bid into a tender in India. So we'll await what the rates are in the next tender.
But this tender that was cancelled for 2 jackup rigs, with the ONGC, that will impact the second half performance. If you could give us an update on that front.
Not really, because we've got a short-term contract. So we got a short-term contract for the rig which was bid into that, the first rig which was bid into that tender. So at least for the next 4 months, we've got employment. And now there are options to extend it as well. So not a short-term impact. Maybe it could have an impact over maybe the next year or so. But again, there will be more tenders coming through, hopefully.
All right. Mr. Shivakumar, final question before we let you go. In Q2, as you said, that the rates were a little bit softish, seasonally weak as well. But the NAVs were maintained. That's because some of these contracts are already longer term. So you're already enjoying the benefits of higher rates there. And you're throwing up cash as well. So NAVs didn't come down. Do you expect more of the same, say, in Q3, Q4? Because some of them are locked up. You're throwing up cash as well. So NAVs will not dip?
So in the previous quarter, while rates were weak, people were still, and especially in tankers, which form a majority of our fleet, participants were still expecting rates to recover during the winter. So prices of ships didn't really come down, especially not for tankers. Now they've started to come down. So you will not have that impact, meaning you will, so that will definitely pressure the net asset value in this quarter. To some extent, not a huge extent because we're talking 10 to 15%, but to some extent that will have an impact.
Okay, Mr. Shivakumar, we'll leave it there, sir. Thank you for joining us as we wind down 24 and see you in the new year. And thanks very much. So that's G Shipping with the perspective on the business and outlook for the company as well.